Hello, this is the tradesight stock and futures roadmap and market index preview for the week beginning Monday, March 4th, 2013. We'll be ending on Friday, the 8th of March. Just a reminder that next weekend, around the 9th, 10th of March, is the time change here in the U.S. Got several things to look at, so let's go ahead and get started. Here's a look at the S&P 500 daily chart index. And we were so close today. I was watching it all the way to the close on getting the 13 seeker sell signal on that daily chart index. But even if I go to projection mode here, you can see that we did not get a 13 on this bar. Reason is because you have to close above 2 bars back. Now you can see our close today was 1518.20. 2 bars back high, the high you have to close above that is 1520.08. So we were less than 2 points away from getting a secret daily chart sell signal. What does it take to get that signal on Monday? On Monday we need to close above Thursday's high right up here, okay, which is about 1525 and change, so we need to be up about 7 points. And if not, on Tuesday we need to close above today's high. Is that going to happen now? I don't know. I'd sure love to get a clean signal on that, and the reason being that we also have, as we know, we've been watching this for the last couple weeks, a 13 sell signal in place on the weekly. We've been using that risk line very tightly here, and now this week, as I project out, you can see with this week closed now, we have a new 9-bar setup to the downside. So there's a lot of factors weighing on this market going lower. You would certainly like to get that 13 sell signal on the daily as well. And then anything to the downside, we're just going to be all over and hope for some volume and some push here, make some money on that stuff. So that's what we're looking for on the broad market. Now let's take a look at the Nasdaq 100. Again, this is a weekly chart. Now this close today erased what would have been a 9-bar setup. You can see we were 8 bars, and if I go to projection mode, the close does not meet the 4-bar look back criteria, so we do not get a 9-bar setup on the NDX. That's the weekly chart. And again, if I go to the daily chart on the NDX, you can see I've just been so flat since the beginning of the year. I mean, I'm still amazed every time I pull this chart up at how ridiculous this NDX looks. And remember, that's because you've had kind of a couple of conflicting factors. Apple weighs very heavily on this, as well as the broad market. And if you take a look at Apple on the daily, we had a 13 buy signal on the seeker, but we're already addressing that risk level. If that doesn't hold, we're closed right at it today. If that holds, that's great. That's what the risk level's for. If it doesn't hold and we fail that quickly, you know what that means. That usually means a big push down once that breaks. So Apple could be in some significant trouble here. Remember that we're still watching a gap on Apple from last year, and I'll back the chart out a little bit so you can just see it here. This level right around 420 and change. Okay, straight over here, and we are now within about 10 points of that, of course. So that's the area that we're going to be watching on Apple for a gap fill. But honestly, you break that seeker risk line this soon after getting that signal, and I think they could go a lot lower on Apple very quickly. The competing side of that that's held the Nasdaq in place, of course, has been Google, which has run up very strongly now, closing over the $800 level again, and doing a high range base here. So that's where the money is going while it's coming out of Apple, obviously, and so it's kept the Nasdaq kind of in place. Apple does weigh a little more heavily than Google, obviously, because as a net cap issue, it's worth more. But let's just face it: if the one's selling off and the other's going up, they're kind of offsetting, and that's where you get what you're seeing on the NDX. Now, the daily chart of the biotech index breaking out to new highs here. That looks very bullish, and again, biotechs and banks often lead the market. This is a very bullish sign to see this thing breaking out here, and that's one thing that's kind of interesting and sort of a side note versus everything else we're seeing indication-wise. SOX was also setting up semiconductors for a 13 sell signal and did not get it. Needs to close a little bit higher as well. So the question is the market just too negative, going to roll over here anyways, or can we get either Monday or Tuesday just a little bit of upside, enough to get those signals? Because as soon as that happens and we start to head lower after that, everything's going to be in play. I mean, everything. Watch for a very negative week. And of course, it's fascinating that these technicals time out with the federal sequester that's now in place until they get that resolved. Obviously, if they can resolve that at some point in time and prevent the complete tightening of the economy that we're going to see over that, if they can do that soon enough, then that could change the character of the market and give us an upside push. But if they don't get that fixed anytime soon, and there doesn't seem to be any indication that they will, this market's going to do what the technicals are showing. Let's take a look now at, so that's what we're looking at for this week ahead, just in terms of the market. Definitely a lot more indications of a downside. Everything that we've been talking about for the last 2 weeks has played out in slow motion. Nasdaq volume was 1.8 billion shares on Friday. It was decent most of the week. Strangely light on Wednesday, one of the lightest trading days of the year, even though it had a pretty big range and headed up, and it was a decent trading day for us. And we also had a decent trading day on Friday for stocks, futures, and Forex. Everything made money across the board. Pretty good day overall. Here's a look at the economic data coming in this week, and we'll start with just look at the U.S. side, obviously, for stocks and futures. No data on Monday. On Tuesday, March 5th, we've got ISM services. That's a decent number, 30 minutes into the market. That can move things. On Wednesday, mortgage index, ADP employment change, factory orders, crude oil inventories, Fed beige book in the afternoon. None of that's a big deal. Thursday, initial and continuing jobless claims. Trade balance is a big number. Productivity revised for Q4, unit labor costs, natural gas, consumer credit in the afternoon. And then on Friday, the big one for the week, non-farm payroll data along with the unemployment rate, and then wholesale inventories. That's going to cause a gap. So we have the sequester to worry about. We're not near options expiration yet. It's still 2 weeks off. So the focal points will be that trade balance number is pretty big, but the unemployment rate is what the market will be looking for. There's no data on Monday. So Monday probably be a little lighter. Fridays are always light in the afternoon. Hopefully Tuesday, Wednesday, and Thursday. If we can get that sell signal early in the week, we could see some pretty decent pressure to the downside during the back half of the week. And hopefully the volume picks up for that, and we'll just be in short mode looking at everything across the board. So have a great weekend, and we will be in the lab on Monday.